Ronin is coming back to Ethereum because just when you thought they were out, they pulled you back in. But more on that in a second. Welcome to Cryptocurrents, the weekly podcast of people working in crypto and blockchain, talking about everything you need to know in crypto and blockchain. No shilling, no FOMO, just everything you need to be smarter at crypto. Think of us like the perfect trio on an Apex Legends drop. We're going to get you that W, but it's going to be different every single time. Today, I'm joined by Katya from the Mew team
Hi, Vince.
and special guest Steven from Taraxa.
How's it going, Vince?
Good, man. And of course, I'm Vince, your host, as always. But we'll talk about Ronin in a little bit. I want to kind of start off with something that's really interesting to me, and that is the Bullish IPO. So, Bullish is a company that is an exchange that also owns CoinDesk. And they recently just IPO'd. And this is the second or third really high profile crypto IPO we've seen. And so, Steven, kind of kick us off. Talk to me about this. Talk to me about crypto IPOs. Is this just cash grabs, or are these things that are interesting to watch? Is this good for the industry, bad for the industry? Whatever really floats your boat.
Yeah. Well, first of all, thank you very much for having me on the show. It's always a pleasure to talk to you. And yeah, so this is interesting because we're seeing a rapid, I would say, mainstream adoption coming up. Obviously, with regulatory relaxation, a lot of companies that were standing on the sidelines are actually rushing in to make sure that they fully take advantage of this market and this technology. So I actually wrote an article a while ago about how banks, right? Like we see these large scale banks like JP Morgan, Bank of America, that basically publicly have been bad mouthing crypto for years and years and years while secretly building their very sophisticated crypto technology for interbank settlements. So it's not that large financial institutions don't like crypto. They love it. They've been loving it since day one. And they are probably one of the most aggressive sectors at exploring and investing into the technology stack. And they know how to use it, right? It's just sort of with the regulatory kind of relaxation, now that now they can finally speak the truth, and they're not shy about putting their money where their mouth is. So with something like Bullish, I think this is an example of this I wouldn't say it's white space, but it's, it is sort of a blue, kind of a blue sky market right now. It's bridging institutional, large financial institutions with the crypto market in general. So there does need to be a bridge like that. I think that was Bullish's focus. There are obviously other players, right? Like in Coinbase, Kraken, they all have their own. Like Gemini has their own as well. I expect we'll see a lot more of that going forward. I think, yeah, I mean, I think even like one of the exchanges that were founded by a bunch of former FTX alumnus, like Backpack, they're also trying to focus on institutional. So institutional is very, very hot right now. So there's a lot of demand. So people are rushing in. I think it's sort of a normal consequence of having mainstream adoption. So it's pretty interesting. Now, that being said, is it good for the space? Now, it depends on what you think the space is, right? So
say more.
Now, if you believe that the space is one where it's, primarily financial driven, tokenizing assets, a lot more on-chain stuff, more financial rails, all of that stuff. Yeah, it's amazing for the space. You're not going to be able to really scale this technology without adoption from mainstream financial institutions. Now, if you think the space is about decentralization, really about freedom from censorship, freedom from control, centralized control, then I would say this is sort of bad for the space. Right? And we've seen this before, right? The internet started out being extremely idealized, very decentralized, right?
Those were the days.
Those were the days where people had this idealistic excitement about freely sharing information, and that kind of went away really quickly when these platforms started emerging. So I think similar things will happen within crypto, where every single major financial institution coming into the space have their own infrastructural layer. They have their own layer one, they have their own layer two, they have whatever, and they're all centralized, right? Because it's corporate governance, right? You need control, right? You need accountability. Someone needs something to sue, right? And also there's a lot of compliance to consider. Right? It's not wholly sort of I'm coming in to destroy this perfect, utopia of decentralization. They do also have to answer to regulators as well. So a lot of these reasons kind of are pushing for all this centralized infrastructure, and they will start dominating. I think the crypto landscape as far as some sort of as far as asset, right, tokenization goes. So
Yeah.
I think the financial rail of crypto is going to be highly centralized, and it's going to get more and more centralized going forward. It's not a complete loss, right? Because I think because all these centralized systems, I think they all have they want to interact with decentralized systems, because one thing I think they do see value in is the idea of auditability. Right. So you do have auditability, you do have to a certain extent accountability. There is a legal obviously fallback, right? If something on chain looks fishy and doesn't match up with the numbers, there's a company that you can sue, right? So these
Yeah.
are not anonymous actors, on the dark web. So it is very centralized. It's pushing things to be centralized. And yeah, so I think overall it's good for crypto, right? More adoption, more awareness. But I would just caution sort of, those of us who really believe in a decentralization vision from the very beginning, we need to very aggressively start exploring options and use cases that actually fully take advantage and are successful precisely because of decentralization, rather than having it just kind of a nice to have feature on the side.
Yeah, I agree. And one of the fears I have with all of these IPOs is I am worried that we're going to see some bad actors IPO and just print money, which could be detrimental, to the perception of the space, which is always something that I'm always concerned about from like what the narrative of crypto is. Um, but yeah, I think we're going to see a lot more IPOs just because Bullish was successful, Circle was extremely successful. eToro, nobody talked about that. It was very interesting. But I also think it's funny that Bullish, you can't use their exchange in the States, and yet they're on the stock exchange, which is odd to me at the end of the day. I don't know. Katya, what are your thoughts?
Well, I was going to ask Stephen as he was speaking what he thinks the space is, whether it's the centralized.
Oh, it's true,
But
I guess.
I think I know the answer now. I think Stephen is with us on the decentralized side, but he's made peace with with reality.
Yeah.
And I also think it's interesting how you said. About the banks and that they've been, positioning themselves for this for a long time, and how you said that they're building or have built out their very sophisticated technology. And I think that's an interesting take, because in the crypto space, especially this kind of like decentralized maxi space, I think it's common to frame these old TradFi institutions as stupid boomers who don't get it, who are never gonna get on board because they just don't understand it, or even if they want to, they're not gonna have the capability. And I personally think that's a naive take as well,
Hmm.
although I'm not close enough to any. One of my
Boomer?
besties from Stanford
Oh.
works at Goldman Sachs, but like I don't I don't talk to her about those things. So um it's I think it's an interesting take, because I agree. I think we are maybe underestimating the extent to which these institutions not only are prepared, but I mean, they can hire people who understand EVM. And if this huge institution is going to offer you the salary and benefits and whatever that they are capable of doing, are you not going to go and work for them? Sure, you will. So yeah, I thought that was an
Stephen won't. He's
interesting.
sitting there shaking his head. He's like, no.
What? No, no, no. I'm nodding. I'm nodding. Yeah, yeah, yeah. Nodding.
So yeah,
I
so
can see
I
it in
thought,
your eyes. You're like, no, we must maintain
yeah.
decentralization.
No, but see, he's saying we need to take an aggressive approach to positioning ourselves as well. And that's another thing that we've spoken about before on the podcast, how there's this trend now for TradFi and DeFi to kind of merge into each other. And I learned the other day from ChatGPT, I was trying to do some research, and it informed me that the term now is either HiFi, HYFI, for hybrid finance. Although hi-fi, because I'm a 90s girl, makes me think of like, you know, a
Lo-fi.
cassette CD, you know, like
Hi-fi. There's like an
me
orange juice called hi-fi, isn't it? Or...
yeah, right.
I think
right.
so. Yeah.
Yeah. So either hi-fi or CD-fi for centralized, decentralized, fine. I don't know. Both are bad. But this kind of merging of it, and I think what I was saying earlier when we spoke with Vince is that I feel like crypto companies that started centralized, like Coinbase and whatever, they are trying to get more into the decentralized space. And then the opposite, companies that are natively decentralized are trying to get onto the like RWA train, the stablecoin train, to make sure they're supporting everything. And because I think maybe, Stephen, you're saying a similar thing, because both are understanding that both centralized and decentralized blockchains are going to play a part. And we are not sure at this point which is going to be the dominant in which spaces, in which consumer categories. And so everybody's trying to get a foot into like each side.
Yeah. Yeah, I mean, I think I thought we actually thought about this for a very long time, or at least I thought about it for a very long time at the very beginning of the project. I think I wrote an article about how like, well, what does decentralization actually mean? What is decentralization, right? So the core thesis is sort of like the only thing that's wrong about centralization, right? Centralization is very fast, their legal accountability scales very well. Decentralized systems are very slow. They're inherently inefficient because of decentralizing. Nothing's free in engineering. The only thing that's really wrong about centralized systems is that they can cheat. They can cheat you, and what's worse, you don't even know that you're getting cheated. So the idea is really sort of, use just enough decentralization so that centralized systems can't cheat. And then you sort of have achieved the goal, right? At the very, very beginning of Ethereum, you see all these applications actually brought the entire application stack on chain and resulted in some very poorly received, because poor user experience, very slow, everything's very latent. So people didn't really use that. So the idea is sort of like every single technology has a role, and the role of decentralization is prevent cheating and add accountability, right? Whether that's on chain or audit, or whether it's immediately on chain where accountability is enforced and you just outright cannot cheat, or adding audit trails on chain and have off chain legal systems to enforce that after the fact. Right. Either way, you kind of achieve your goal. So a hybrid system, I think, is very natural. Actually, the two things that I worked on very early in 2017 before even starting Interact. So one was an algorithmic stablecoin, if you can believe it. Another one was actually a hybrid exchange, because we recognized that the idea of decentralized finance, it was never really going to take off with normal users. It was too complicated, wallets and all this kind of stuff. So the first big one that kind of came out was DYDX, very successful. And then they migrated to Cosmos and became significantly less successful. And
yeah,
that's
get them.
the same year, right? They actually migrated to Cosmos, was the same year that Hyperliquid started building their exchange. And then now they're very, very big, right? They're so big that basically all the centralized exchanges are now scrambling to come up with a strategy because they see the writing on the wall. So I think the hybridized exchange is a very good illustration of the idea that you have a centralized system, but at the same time you have a decentralized system, keeping the centralized system honest. Right? If you keep it honest, you have no problem using it, right? So I really think that's the role, right? I mean, this is what I say, sort of getting back into the basics of what decentralization is. It's a mechanism to enforce trust. In fact, it's a mechanism that enforces trust very cheaply. We have all kinds of trust enforcement mechanisms in our society, in our daily lives, are all very expensive. Law enforcement, very expensive. Traffic rules, very expensive. Regulatory rules, all this kind of stuff. Like you walk out your door, why do you trust that you're not going to get, instantly robbed, killed, and poisoned by the food you eat, right? So these are all kind of trust systems that we've actually built out for society to function, and the vast majority of them are extraordinarily expensive. So what decentralized systems provide you is a very cheap source of trust, and it's a very cheap and strong guarantee of trust. So that's what we're really here to see. I think what I'm worried about, right? What I'm really worried about is that the end users, when all this stuff has been extracted away, kind of lose sight of the fact that this is something extraordinary. This is this technology, this this
Yeah.
cheap trust mechanism is extraordinary. I don't think most people will really understand it. And
And it's hard to sell it as well, right? Like I feel like this decentralization like is difficult to sell, like most things that are kind of good for bettering the way we do things. I don't know, environment, things like that. It's hard to sell it. Entertainment
yeah,
is easy to sell. On board and get like 500 in ETH is easy to sell, but the idea of decentralization and why it's good for
exactly.
society is hard to sell.
And if
Yeah.
people don't understand it, they don't buy into it, then this starts you start seeing cutting corners, right? Maybe a lot of these large financial institutions that start embracing decentralization purely because they see liquidity on chain that they want to get access to it, for example. And then since nobody cares about decentralization anyway, they slowly chip away and pretty soon there's just another centralized system, right? So people need to really kind of be aware of this. Yeah, it's a hard sell. I think people need to be vigilant. I think also there's a lack of diversity in use cases. Right now, it's basically 100% financial. The only thing that you sort of hear about is financial.
Right.
I got into crypto specifically for non-financial reasons because I saw it as a way to really enable a lot more automation. Just large human organizations run very inefficiently because they don't have a lot of automation. And the automation are usually not implemented or prevented from being kind of maximally leveraged because people don't trust the processes and the data that go into it. This is why large corporations have like 10 layers of middle management that sit around and do nothing but slow things down, right? And human capacity, the CEO at the top, human capacity to process data and interpret data is highly limited. In order for us to scale, we need more automation. And I think that's what decentralization is actually really good for. So
Yeah.
yeah. So we need more diversified use cases. Yeah.
I agree. And you've both given me like 27 different great segues, and I just am not interrupting because holy shit, like I could listen to you two talk all day. This is fantastic. But you brought up a great point where you said, we need to make sure people aren't cheating. And that's good. And that'll transition nicely to our next topic, which is the SEC inviting small crypto projects to come have a little chit chat.
Yeah.
Which is funny because I know, Stephen, you've been in the space longer than I have, but I assume you remember back in the day when crypto was basically founded on the back of meetup.com, where we would just have small meetups to talk about crypto. And I feel like the government is doing that. Which they're like, yeah, we're gonna have a little crypto roundtable discussion. We're gonna invite these, companies to come talk in Texas. So kind of talk to me about the SEC and regulation, where you guys kind of fall on that. Katya, why don't you kick us off?
Well, the first time I saw that news, I don't know why, like, but I had this vision of like the Godfather or something. They're like, just come talk, like we're just gonna talk, and then a guy with a machine gun comes into this Italian restaurant, and I don't know. I'm not implying the SEC is the mafia, but this. But I think it's interesting for this one that they are specifically asking for small beginning stage projects because the roundtables they did previously, and I'm not even gonna dignify Trump's shindig with a mention, but um, they were all like big players, lawyers, centralized guys in suits that have these huge companies, a lot of skin in the game, very already integrated into the centralized machines, sort of, but like getting a little bit more closer to it, a little bit more leverage. This supposedly is a whole different thing. It's like small companies who are actually working in this space trying to. So I don't know whether it's like an honest effort to understand the grassroots, for lack of a better word, of
Mm-hmm.
crypto, or like a get them young kind of thing, and like convert them to what we need them
Crush
to
their
do,
dreams.
whatever. Yeah. So yeah. So I think it's interesting that they're like this is a slightly different approach than they did before with the small companies. I would be curious to know who goes, like what are the list of companies that end up attending.
Well, I think Stephen had talked about going. Didn't you mention that?
Yeah. I don't know about. I mean, the history, right? The track record hasn't been good, right? So I think
Right.
the first time So yeah, I've been in here for a long, and I just want to say, like, the regulation has really held us back. Okay,
Hmm.
because I think I'm probably one of the few founders that strictly adhere to like a very conservative interpretation of, legal precedents and enforcement precedents. So we literally do nothing that all these other projects that are doing on a daily basis, right? Our community is always yelling at me like, what are you afraid of? So paranoid, blah blah blah. So I don't. I'm I think overall, right? Like I think I'm happy with the way the regulations are going, especially the push for regulatory clarity. So just to give you a kind of historical rundown, right? Like the first time the government started paying attention was I think March of 2018 when the SEC started sending out hundreds and hundreds of requests for information to all the crypto startups in the US. So
Hmm.
that's when I first started. And before at the SEC sent that information request, nobody hired lawyers when they started a crypto company. And suddenly there was a mad dash. Nobody knew how to interpret the law. I had tons of crackpot lawyers who were telling me like I should turn like my company into like literally like a gold mining company, like like a mining company because that's legal. So I mean, it was sort of very confused. Very confused. And the next 3 years, I like just sort of remain confused. Not much was happening. What really got the government's attention was the Axie Infinity hack in 2020, where $400 million was stolen, and that was stolen by North Korea. And it went directly into their nuclear weapons program. So it suddenly elevated, right? It's no longer just the SEC. Now it's like the FBI, the DOJ, FinCEN, all the big guns are coming out. People, SEC has limited budget. These other guys have unlimited budget. Okay, so when it comes to anti-terrorism, there's no budget. So
Yeah.
suddenly people like senior White House aides are talking about crypto and how it's dangerous. So that was not a good sign. And then we have a series of FTX, Terra Luna, all that started happening. And then the SEC and other enforcement agencies from the DOJ just start going wild. I mean, they just start going suing people left and right, arresting people, going after exchanges, all that kind of stuff, right? So it's very, very scary. And then they got to Binance, they got to CZ, locked them up for a while. The rumor is that he named a lot of names.
Hmm.
And that's why all these other exchanges are kind of falling like dominoes, right? Like all these other exchanges, like people like KuCoin, just I think a few months ago. The rumor is that KuCoin was like the first one to go right after CZ got arrested, and actually the rumor turned out to be true, right? They were actually the primary target. But there are a lot more exchanges that are gonna kind of fall like dominoes later on as well. So the government has been extraordinarily aggressive. And I
Yeah.
think that level of aggressiveness is not purely just driven by like sort of, anti-crypto, anti-whatever. I think it was far more kind of driven by the fact that they're worried that this is kind of like a runaway terrorist funding mechanism, which, I'm not like somebody who's a conspiracy theorist and the government's out to get you, that kind of thing. I think typically think people do things for a reason. And I think that's probably the reason, right? So overall track record from interactions with the government have been largely negative, and these regulatory agencies have been playing fast and loose as well. I think a few years ago, you saw that there was a company based out in Utah where the SEC kind of brought a lawsuit, and as soon as you bring a lawsuit, the company fails, right? Because people are
Yeah.
like, oh my God, run by
Run for the
criminals.
hills. Run for the
Yeah, and
hills.
then it turned out that the SEC actually fabricated evidence. The judge reprimanded the SEC, and a few of the lawyers that were leading up that case lost their jobs. But the company is
Was
dead.
already dead. Yeah.
It's already dead. I mean, what are you going to do? I mean, this is a classic case where, the vast majority of companies and projects can't afford to mount a effective legal defense. The lawyers that go into the securities order cost $2,000 to $5,000 an hour. I mean, unless like if you're Uniswap, right? They they sued Uniswap, now and then brought in the FDIC. The FDIC issued a warning, and then suddenly over 200 employees at the Uniswap team lost their bank accounts globally. They
Yeah.
got debanked overnight. But they're Uniswap. they have infinite money, so they were able to defend until all charges were dropped. I think earlier this year as well. But for normal people, like we can't afford these lawyers, right? And the government comes after you, you just say, "I'm sorry, I guess whatever you say is good, right? Because I can't afford it." So the track record, especially with smaller companies, smaller projects, has been horrendous. Horrendous. You cannot afford to have not even a lawsuit, just an inquiry from these regulatory agencies can absolutely kill you.
Yeah.
So yeah, I mean, the topic originally was, Hester Pierce, to be fair, she has been one of the very consistent, rational voices in the regulatory agencies, pushing for more transparency, pushing for clear definition of what crypto is, classification of the asset, and the regulatory rules that would apply to them. So the fact that she's leading the charge, all right, earlier this year, right, there's an internal panel to review all past regulatory actions and internal enforcement, like kind of rules. It was led by Hester Pierce, which is a very good sign.
Mm-hmm.
So in that sense, that she's the one that's personally making the invitation is a good sign. But am I going? Most likely not, just because honestly, like it's one of these things where the government's track record has been so bad
Yeah.
that I don't know if it's gonna like is it black and white like 180? Is it, before they're like putting everyone in jail, debanking everyone, and today suddenly like oh yeah everything's okay now, like we love you.
Nothing but
Um,
high fives and lollipops for everyone.
yeah, it's a little iffy. It's a little iffy. I'm very curious to see who goes. I'm very curious to see the outcome. I'm very optimistic because I do think that again, having the right people heading up these initiatives is very, very important. So that's all good. Not just the SEC. The SEC is not even the scariest, like the regulatory agency, right? It's really like people like FinCEN, right? People who are in charge of anti-money laundering, people who refer all their cases into the FBI and the DOJ. These are the scary people, right? So we are also seeing kind of relaxation on that, but mostly for large institutions under the broader umbrella of legalizing banks offering collateral deposits for stablecoins. So that's a good development. Banks can now run like blockchain nodes. So that's a really great development. It's a little bit of a reversal, I guess, not a huge reversal of the infrastructure bill, which basically effectively banned running of nodes in the United States
Mm-hmm.
without but let's see. Yeah, let's see. So really great first step, really great all lot of very positive and friendly regulatory rulings coming out. We have bills coming out of Congress on stable coins, which is very, very good. We potentially see another bill, I think, in Congress right now that's going to classify crypto as a commodity rather than a security, which is again very, very good. So this kind of gets you out of the security kind of hole. But again, like market manipulation, money laundering, terrorist funding still are concerns. Like how do you be compliant, right? How do you run a company and be compliant? Is running a blockchain node still technically illegal, right? These are all kind of questions that need to be addressed and clarified before before smaller players feel comfortable. Anyway, like I said, I don't I'm not somebody who likes to read about laws, to be very honest. This is like something
Doesn't
I
sound like it. I'm like, Steven knows about all the laws. I'm kind of like, I'm glad I don't know all of this. The more you know, the scarier life
it's
is.
it's pretty scary. It's pretty scary, right? I think yeah, I mean, I feel like the reason why I know this is because it's so aggressive, right? Enforcement is
Yeah.
so aggressive. So yeah, I mean, it's I hope for better times to come. This specific event, I think, is very positive. Hopefully, it turns out well for everyone involved.
Oh
Uh,
my God.
Hopefully they just don't wind up in, the Texas River, to take Katya's Mafia joke. Yeah, I think this is something we're going to have to revisit after the fact and be like, okay, was this successful or not? Because I agree with you. Like, it could go either way, but I hope it's a step in the right
Just
direction.
hand out subpoenas to everyone, So thanks for coming
Thanks for coming,
by.
guys. Here's your subpoena. You're on a list now. So let's kind of move away from macro stuff to kind of a more retail focused thing. We don't talk about price action on this show, but it's undeniable that Ethereum has gone gonzo over the last few months, which saw unstaking queues for the first time in what feels like years. which is kind of interesting to see. I wonder how, we probably didn't see anything on socials regarding it, because I feel like we have enough OG users that are kind of in it for the long haul. But I can definitely see it being uh, a stark reminder for people that they maybe don't understand crypto entirely when they're like, "What do you mean there's a queue for me to get my ETH?" What are your guys' thoughts on this?
Like it was fascinating to me. So Ethereum just turned 10 and Mu just turned 10 because it started, just a little bit after Ethereum. And we had a couple of episodes where we talked about that. And it's crazy to me that um so the merge happened September 22. And Chapella, when unstaking was enabled, happened in April 23, which is only 2 years ago. And I remember writing content about unstaking and the queue and how unstaking was going to work and how the validator exits are going to work and like linking to the content that Ethereum Foundation wrote a lot of content, ethereum.org, about that. And it's crazy to me that just 2 years later, people are like, "What was the queue? What? What? Like,
What is
so
this?
what is this? Like, what do you mean, like, I can't, like, unstake and see my money today or tomorrow?" Which I think it was for a long time, like, a day or less that, you got your
Yeah.
staked ETH deposited back. And I don't know, I'm just kind of enjoying being like, "What? You don't know what the queue is?" Like, I'm what are you even? What? So I'm kind of like having a little fun with that. But I mean, I've read that for a moment I was like, oh, are we losing all our validators? Like I'm solely responsible for Ethereum's health over here. I'm like getting concerned. But I've read that the validator number is still like at an all-time high at like over 1 million validators or
Yeah.
something. So this is not damaging to Ethereum's health, but I just thought it was funny with people being like, "Why am I waiting for a week? What is this? Like this is how it started, dude." Like this.
Yeah,
Yeah,
Steve.
I haven't. Yeah, I have honestly, I haven't been paying too much attention to this. I mean, for proof of stake systems, if you want to unstake, there usually is a pause period on Taraxa. On Taraxa, the pause used to be very long. It used to be like 32 days or something. Like the community really hated that. So I think we did a governance vote. People changed it to 7 days. Which obviously a segment of the community still dislike. They want instantly outstate. I think the reason why there is a queue, removing the discussion for throughput and capacity, there is a queue because I think the you want major shifts, especially in staking, to be well telegraphed to the ecosystem. Right, people need to know what's happening. It can't if it's instant, like people might get caught, surprised and they don't know what's going on. So I think it has both economic as well as security implications. So yeah, it is. I think the queue is reasonable. Is 1 day or 7 day or 30 day. I mean, that's up for debate. I think depending on what you want to see, maybe the larger the ecosystem is, the longer the delay should be. Yeah. Again, I don't know the exact mechanism
Yeah.
through which they do this. But just in general, I think for proof of stake systems, it does make sense to have a delay
Yeah.
when people stay. Yeah, so.
I think ultimately it's a little unclear though to new people that are coming into crypto. They're just like, "Oh, I'll stake it and earn yield, great." But then they hit this on queue and they're like, "Oh, wait, what?" It kind
They
of
can always
shows
go to
that,
Lido, right? They can always go
yeah,
to liquid staking, and
for
yeah.
sure, for sure.
You know what I also like? What's interesting to me is to see, because people who are staking, especially full validators, like 32 ETH is not nothing. I mean, they're going to bring down the amount for a full validator, but I don't think it happened yet. So, and it's interesting for me to see like what is the threshold, because these are people who are not fooling around. They're here for the long haul. If they're staking this amount of ETH, um, they're not playing around, but there is a point where the price action is such that even these, you would think,
Yeah,
level-headed
yeah.
long haul people are like, I gotta take the profits or whatever it is they're doing. And it's interesting to me to see where the threshold is. Like I'm not staking at this point, but like I hold some ETH, I hold some Bitcoin, but like I don't look in that direction even. I'm like 10, 20 years, I'm going to see, if it's going to be $10 million, great. If it's going to be $10, that's life.
Yeah.
But it's just interesting for me to see like at which point people are just getting like, this is too much. Like we were talking again about the history of Ethereum and how Bitcoin was, 10 cents or whatever it is. And Vince was saying, even if I got Bitcoin then or ETH at the sale, like when it did a 10x, I would have sold.
Yeah, and it would have been very
like
rational, right? It would have been extremely rational. 10x is nothing to scoff at, you know? Yeah, so.
Yeah, but it's funny to me. Are you staking on any proof of stake yourself, Steven?
Me? No, I'm not staking on anything. Yeah. I mean, I don't even trade crypto at all. Like I said, I'm just so kind of uninterested in the financial side of things. I
Mm-hmm.
think honestly, that's a little bit to the detriment because often I kind of try to block out like the what I consider to be noise. But I try to think about obviously price and whatever from the health of the ecosystem perspective. But we often try to bring more people onto the team who have more of a speculating mindset
Mhm.
because that does represent like kind of 99% of the
For
community, right?
balance and
Yeah.
yeah.
Yeah, I can't not understand what people are saying to me, right? I have to understand kind of their mentality and it's sometimes like some of the urgency that comes from like these team members who are like, holy crap, why are we not doing these and these? It has to be done right away. I'm like, oh, really? Is that important? Okay, let's let's do it then. So that's sort of the setup that we have. But yeah, not don't really play around with this kind of stuff. Yeah, I'm more like I said, I'm mostly interested in the technology and kind of the non-financial use cases.
Well,
Yeah.
Yeah,
I personally believe that that's actually the way to go because look at Ethereum, right? There was so much trash talk about ETH price and everything. And to his credit, Vitalik and a lot of the core ETH devs are able to brush it off and be very level headed about it. And ETH is just like Bitcoin is dead. ETH is dead every few years or every few
yeah,
months and whatnot. But now look at this, like with Ronin even coming back to it unintentionally. I'm giving you a
Way to
segue.
segue.
Yeah, like people now are and institutions are interested in Ethereum. Robinhood is going to be doing an EVM. So and now everybody's like, oh well, Robinhood is doing it. Well, of course, because Ethereum is so great. It's been
yeah.
the uptime and the stability and whatever. And Vitalik is he's probably not that kind of person, but over there being like, I told you so, I told you so, so I think that's actually the right attitude to have, personally,
Yeah.
my personal
Yeah,
opinion.
yeah.
Well, then kick us off on talking about the Ronin migration back to Ethereum. And I'm really intrigued on your perspective on this, Stephen. As is this good for projects to go to different chains, come back? Is it just kind of like people chasing that financial incentive? Like, what's your thoughts on those?
Yeah, I mean, Ethereum is has won the DeFi game, right? I mean, that's not like kind of beat around the bush here. Ethereum has won DeFi. Okay,
Mhm.
it's not even close, not even close. So if you have use cases that are highly dependent upon liquidity, you need to be very close, as close as you can, on Ethereum. So yeah, I mean, Ronin, they did their own thing. 2020 got hacked, $400 million got stolen by North Korea. Not exactly great. I am absolutely flabbergasted that they're still around, that they haven't died yet, which is very interesting. And, so I mean, there are several factors that go into it. First of all, building your own layer one is tough. You need specialized teams, specialized skills, and if that's not your primary business, right? If your primary business is something else, then it's a little bit difficult to kind of build like that kind of mentality and overall dedication towards actually just building the best infrastructure tech. I don't know any details about Ronin or Axie Infinity, but they're a game company, right? I mean, they're not like a layer one company. So from a technical perspective, it might seem a little bit tough, right, to kind of keep on trying to keep something up. So I think if they're going to focus on the things that they're good at, with supporting games, getting more games on, building ecosystems, then I think it's very reasonable to actually offload this technical burden onto some other company who does it, much better. Like I don't know exactly what kind of stack they're using. but probably going to go with something like a ZK or Optimism or whatever, right? I mean, something that someone else has already spent a lot of time building and battle tested, and it just works. So from a both kind of liquidity access perspective as well as a technical kind of burden perspective, I think it's pretty smart to kind of make that move, right? I mean, we've seen a lot of projects kind of pivot into layer twos, and yeah, I mean the same reason why like Robinhood, right? Why on earth why they want why would they even want this, right? Because and why did they choose a layer two? Because they want easy access to the massive liquidity that exists on the public chain. It's very simple. I mean, their business, they're not doing this because they believe in decentralization. They're doing this to make money, right? And there are
It's a
lots of customers
practical
out there.
choice. Yeah.
Practical choice, right? There are a lot of customers. I mean, the products that they're issuing, right? I mean, like all these kind of I mean, they're not actual shares. I think they're most likely synthetic derivatives.
Yeah, there
Like
was a whole blow up of OpenAI going like, we have nothing to do with this. Like these are not
yeah,
our shares.
yeah, exactly. I mean, I think they're derivatives. I mean, in these markets tend to be small, and difficult to access retail, right? So if you put it on chain, you suddenly have expanded this into a global market, right? Because I mean, I don't know how you do on-chain KYC or whatever. But as soon as it gets into like the Ethereum ecosystem, it's free for all, right? So yeah, so I mean, yeah, moving on to Ethereum does make sense from both liquidity as well as technical. And hopefully, there won't be another, multi-million-dollar hack, on these bridges, So
Yeah, no, I agree. Well, Stephen, this has been a fantastic conversation. Tell the people about Taraxa, and we'll include links to some articles that you've written and also the project. But please tell the people about Taraxa and what makes you guys great. Why
yeah,
why you're my favorite conversation I had at ETH Denver this year, and not
yeah.
just because you're a good hang.
Yeah, well, thanks. So Taraxa is one of the fastest layer ones in the world. We have the highest TPS per dollar spent, lowest gas fees, lowest cost to run a validator node. And we are very committed to having a fully decentralized network at the architectural level. So, if you're a builder, come check us out. 100% EVM compatible, fast, low cost. So please and come check us out. Nobody who has ever built on Terraxa has ever walked away disappointed. We have lots of very, very interesting value propositions for builders.
Awesome. Well, that brings us to the end of our episode. Thank you, dear listener, for taking the time to meet with us today and hear what we have to say. It's been an incredible conversation. Make sure you follow the podcast wherever you get your podcasts. Leave us a 5-star review. Make sure you check out all the links in the description on YouTube and wherever you get your podcasts. Stephen, this has been an absolute pleasure. Thank you so much for joining us again today.
Thank you guys so much for inviting me. Yeah, it's been great.
All right, and we will see you next week.
Bye.
Bye.
Bye.